Hi everyone, hope you guys can see my screen.
Your screens are shared now.
Yeah. Thanks for the confirmation and thanks for the wonderful introduction, James. So welcome to this seminar on hands-on introduction to quantitative trading. So in this session, we're going to discuss what quantitative trading is, and we are going to discuss how to create a quantitative trading strategy. On top of it, we are also going to discuss the elements of a quantitative trading system, and we're going to take a live example of a quantitative trading strategy and build it in live and also deploy it. And at the end, we are going to backtest the quantitative trading strategy we picked, and we are going to deploy it in live for paper trading using Blueshift platform. Now, what is quantitative trading? So it is a trading style that uses mathematical and statistical models to identify trading opportunities and also to execute the trade. So before we go in, let's see the common types of quantitative trading strategies that are being deployed in the recent times. So the most used quantitative trading strategy is a momentum trading strategy. So in this section, we're going to take positions in the stocks that are trending. So basically, let's say Tesla is trending, Tesla is in an uptrend. So we can create a quantitative trading strategy that is going to take a long position or buy the Tesla stock when the trend started. Similarly, if there is a downtrend in a particular stock, just like it happened in Facebook recently, so these quantitative trading algorithms also help you to take a short position. So in momentum trading, the most used algorithms are time series based and cross-sectional based momentum strategies. And apart from this, we also have mean reversion based trading strategies. So basically what is mean reversion is, mean reversion concept states that the price of a security or a contract will revert back to the mean in the longer run. So with this as an assumption, we are going to use quantitative methods to design mean reversion trading systems. So most used mean reversion trading system is statistical arbitrage, which is also called pairs trading. And other than this, we can also use mathematical models to basically model the behavior of the stock, and accordingly we can predict where the price can go. So the most used mathematical models are hidden Markov model and regime switching model. So other than this, we can also use Brownian motion to basically model the stock prices and predict them where they could go, and our quantitative trading algorithm will take positions accordingly. And quantitative trading algorithms are also widely used in high frequency trading scenario. So in high frequency trading, we take many positions in less number of time. Basically, like within a second, you may take thousands or maybe tens of thousands of trades. So in high frequency trading, these quantitative trading algorithms are used for market making and also to deploy cash futures arbitrage. So these quantitative algorithms find the inefficiencies of prices and take advantage of them to make money. And you can also create news-based trading systems using quantitative trading algorithms. So basically our algorithm will read the news, score the sentiment, and according to the sentiment score, they trade. So most used algorithms are based on natural language processing. So using NLP, we read the news headlines and then score the sentiment to trade. On top of it, you can also scan the social media using your quantitative trading algorithms and again model the sentiment and take the trading opportunities. So these may look complex to you, but then you can also, let's say you have an idea, you have a hunch or an intuition, you can also model them, and you can also model your observations of the market using quantitative methods and deploy them to make money. So these are all the 5 most used quantitative trading algorithms. And let me show you the basic structure of a quantitative trading system. So for any quantitative trading system, the first element would be data. So you need to collect the data, and according to the data collected, you can create your trading algorithms. So the most commonly used data are price data, fundamental data, economic and news data. So price data means that the price data of a contract you are trading. Let's say if you are trading equities like Apple, Amazon, so you collect the price data of Apple or Amazon, and you clean the data and do some statistical analysis before you create your strategy. Similarly, you can also use fundamental data of the companies like income statements, cash flow statements, etc. And the economic data is also the most used data for quantitative trading, such as macroeconomic data like inflation, GDP, etc. And we will also collect news headlines from many online portals and offline news providers and input that data into our quantitative trading system. Once you're ready with your data, the next step is to create strategy, like model the quantitative trading strategy. So when we say strategy, it's just a bunch of trading rules that's going to help you to either buy or sell a particular stock. So you can use technical analysis. This is widely used. So anybody who is starting to trade, they probably will start with technical analysis. So if you are a manual trader who is into technical analysis already, you can also code these technical analysis trading rules and create your quantitative trading strategy. And you can also use statistical analysis. You can use econometric models and other statistic models to design these strategies. And you can also use mathematical models as discussed earlier. And once you are ready with your strategy, the next step is to backtest. So what exactly it means? So backtest means, so you test your trading rules in the historical data. So you will collect the historical data and you will run the same trading rules on the data so that it will give you the historical performance. You will get an idea of how well your trading rules performs in past. So once you are done with your backtesting and you're happy with the backtest results or performance of your algorithm in the past, you can go to the next step, which is execution. So you can either opt for manual execution or automatic execution. In manual execution of quantitative trading system, you get signals from the strategy or buy or sell signals, and you manually place order in your trading systems, either through an app or a website. But if you opt for automatic execution, you need to get order API from your broker, which will communicate with your algorithm to the trading systems of the broker. So it can be completely automated. All these rules can be completely automated, which will help you to efficiently deploy your algorithm. And once you have your order APIs and connections ready, the most important step would be to have a module that's going to manage risk for you. So what exactly is risk management in this scenario? It's going to help you for capital allocation, like splitting of capital across the assets you're trading or across the strategies you're deploying, and also helps you to define a risk parameters like stop loss or maximum loss you can afford for a day or a month. All these kind of risk parameters, you can code it and give it your quantitative trading system so that it will take care of the risk management. So these are all the 5 major steps that's going to be in your quantitative trading system. And let's see some live examples, and let's see how these 5 steps are employed in the live quantitative trading system. So for live examples, let me share a poll for you. So I'm launching a poll for you. Select the strategy which you want me to design it in live. So take 20 seconds and let's launch this poll for 20 seconds. After 20 seconds, I'm going to explain you one of the strategies that has highest number of votes. I see 57% of you guys have voted. So let's take 20 more seconds. Okay, looks like there is a tie here. 50% of you opted for an intraday trading strategy and 50% of you opted for a trend-based strategy. So I'm going to explain a trend-based strategy so that that trend-based strategy can also be deployed for an intraday trading scenario. So to give you a live example, I'm going to go to our Quantra platform. You guys must have already seen the Quantra platform. So it is a platform, it is one of the products of QuantInsti with self-paced interactive courses. So I'll just go to the website and take you through the process. So we have currently 40 plus courses in our Quantra platform. So as you can see, these are all the courses. So you can select any one of the courses and start learning. So now, since I want to explain a trend-based strategy, let me go to a course named Quantitative Trading Strategies and Modules. So this course name is Quantitative Trading Strategies and Modules. So this course takes you through all the major types of quantitative trading strategies that are currently being used. So let us go into the course. So all Quantra courses are a combination of videos and interactive exercises, notebooks, and multiple choice quiz questions. So these will give you practical exposure. So if you are a retail trader, you might have to maintain the tech infrastructure, etc., to code your strategies. But in Quantra, you can do all by yourself through the Quantra website itself. You need not install anything. You can just select the Python file and you can start coding. So currently, let us see how a trend-based strategy will be designed. Okay. So as discussed earlier, so to create a quantitative trading strategy, you can either use technical indicators, mathematical models, statistical models, or your own hypothesis. So in this notebook, we are going to use 3 technical indicators to create a trend trading strategy. So we are going to use exponential moving average, parabolic SAR, and a stochastic oscillator. Using these 3 technical indicators, we are going to design trading rules and see how the algorithm performs. So let me import the Python modules that's going to help us to create the algorithm. So as discussed earlier, the first step of any quantitative trading system is to get the data. So in this example, we are going to design the strategy for gold ETF. So either you can get this data using an API, or you can also input the data from your side as CSV. So I'm inputting the gold prices data as CSV. So the data starts from 2017 and we have input the data till the end of 2018. So we have taken 2 years of data of gold ETF. We're going to define the trading rules and run the trading rules in this data to understand how our strategy performs. So let us set the parameters for the technical indicators we have selected. And here is where we are defining the technical indicators. So we are using a Python module called TLA, which will help us easily design these technical indicators. Here we are designing parabolic SAR, EMA, and stochastic fast and slow oscillators. So let me output this and show you. So from 2017 to 2018, we have open, high, low, close volume data. And now we have calculated the parabolic SAR, EMA, stochastic fast, and stochastic slow oscillators. So these are all the data of these indicators. Now using this data, let's define some trading rules and generate the trading signals. So we have 5 trading rules. So I'm going to show you here. So we have defined 5 conditions. If all these 5 conditions are met, we are going to generate a buy signal. So we gave conditions like previous day EMI greater than the close price of previous day, and today's EMI less than today's close, and today's parabolic SAR less than the close of today, and stochastic fast greater than stochastic slow, and the last condition is the stochastic fast reading is less than 80. If all these 5 conditions are met, we are going to take a long position. So this is how you decide a trading rule. Similarly, we have designed trading rule for a short condition as well. I'll just run this and I'll show you how these signals are. So this is just a small data cleaning exercise. So initially we have got the data. After we get the data, we have calculated the technical indicators as the next step. So this is how the data looks like after we calculated the technical indicators. And after this, we have designed the trading rules and generated the signals. So these are all the signals that are generated. So let me explain you. So on 13th of February, we have got a short signal. So -1 indicates short signals. So our algorithm is asking us to sell. And let's say we have taken a short position here. Again, probably after a month, it is on March 15th, our algorithm asked us to take a buy position. So we are going to close the position we are holding. And after 15 days, again, we got a short position. Like that, you can see there are buy and sell positions generated by the trading rules we define. So now the next step, once the signals are generated, the next step would be to backtest, to actually run the signals and see how well the trading rules we defined are performing. So for that, let's just calculate the returns. So we have got the gold prices. So let's just calculate the gold price returns and strategy returns as well, and plot the returns of our strategy. So this is the returns plot of our strategy. So this is not a final strategy. So we are just still designing the quantitative trading algorithm with the parameters we gave. So from the beginning of 2017 till the almost mid-January of 2017, our algorithm made a loss of 10%. But right from 2018, it started to pick up, and from here it almost went up by 20%. And by the end of the testing period, we are at probably like 2 to 3% of profit. Now this is the performance according to the trading rules we have defined. Now we can actually change these trading rules and see how the performance is changing. And to actually dig deep into the algorithm and to understand this better, we can use our Blueshift platform. So Blueshift is a place where you can research and construct your algorithms and backtest them. And if you are happy with the backtest results, you can also release them in live. So I'm going to go to Blueshift platform here. So for every course of our Quantra, so once you learn your trading algorithm and understand the trading rules, you can also test them in Blueshift. So let me go to the Blueshift platform. With just a click of a button, you can go to the platform. So this is our Blueshift platform, and we have a bunch of strategies here. So the same strategy we tested in our Python notebook, we are going to try in our Blueshift platform. So as you can see on the left side, we have coding panel, or on the right side, we have a backtesting plotting interface. So I'm going to explain you what this exactly is. So this is Pythonic. This is similar to the code we have done in the previous notebook. But there are few libraries you need to import so that Blueshift will connect to this algorithm. So as you can see, we are importing the required Python modules that are going to help us to create this strategy. And this exercise we are going to do on Bank of America. So previously we have done it on gold and we have got our results. Now we will do the backtesting on Bank of America, and let's see how the strategies perform. So symbol BAC is Bank of America. So initially we have defined the Bank of America. So the advantage of Blueshift platform is if you are coding by yourself, you need to maintain the data and you may need to get the data from other vendors. But in Blueshift, everything is taken care. We maintain the data. You just need to write a single line of code to import the data into your Python interface. So here we are just importing the Bank of America prices, and so this is the place where we are defining the indicators, just like we have defined in our Python notebook. So once you define your technical analysis indicators, you can define your trading rules to go long and to go short. And once the trading rules are defined, you can write or to take order. So for example, if the long condition is met, we're going to go ahead and take a buy position. So similarly, if the short condition is met, we're going to go ahead and take a short position. So let's test this algorithm. Let's back test it on Bank of America from the beginning of January 2020 till October 2021. Let's give a capital of $10,000 and let's see how it performed. So in probably in less than a minute, it's going to give us the results of the back test. So our backtest is completed. So this is the plot of Bank of America, performance of the strategy on Bank of America along with the benchmark. Here the benchmark used was S&P 500. So we are basically comparing the performance of S&P 500 with the strategy performance of Bank of America. So as you can see, we made 113% return. So we almost double, like more than doubled our money in the backtest period. So you can also change this to Apple or Amazon, or you can also give a list of stocks, and you can also change the backtest periods and all. For example, we tested from 2020 to 2021. You can also test from probably 2019 or 2018 January to end of this and see how the strategies perform. So this is the steps you're going to use to perform the backtest. So once you're happy with the results that this algorithm is producing, you can deploy it in live. But this is just a mere snapshot of how this strategy performs. So we can also do more in-depth backtest. For that, you need to click on new backtest. So let's do the same backtest. Let us do it on Bank of America so that we can see the trades generated in other tier sheets. So once you selected the options, you're going to get a notification that the algorithm is on queue. So once the complete backtest is done, again you're going to receive a notification and you can click there to access the backtest results. So as I said, this is a quick run so that you will just get the plot and important performance metrics like Sharpe ratio, alpha, beta, drawdown, and returns. But to understand this backtest better, you need to know, okay, what kind of returns generated by this algorithm monthly, or what are all the trades taken, and what is the margin it is used. All these things we should know to take better trading decisions or better decisions to select the algorithm. So let's wait for the full backtest to run. We'll get a notification here. So currently the backtest is running. So Blueshift will give a random name to that. So you need not worry about this. Let's wait for 20 to 30 seconds and the backtest will be done. So you can either run this strategy on US equities, you can also run this on cryptocurrency contracts like Bitcoin, Ethereum, etc. You can also run on Forex or Indian markets or US markets. So looks like the backtest has completed. So let's go there and see how it's performed. So this is the panel where you can access the full backtest results. So we started our backtest on January 1st, 2020, and we tested till October 1st, 2021. We started with a capital of $10,000 and ended up with a capital of $21,327. So these are all the metrics, but these are almost similar to the previous backtest. So what we do is we can go to tier sheets. So tier sheets are visual representation of performance and other metrics of a backtest model. So for example, see, this is the distribution of algorithm returns. So returns per day. And for example, this is a monthly returns heat map. So our algorithm performed the best in February. It made like 24% returns in February, and it didn't perform well in April. It made a loss of 11%. So we can understand, okay, maybe there is a seasonality factor for this algorithm, and we can also see what kind of positions we took in this algorithm, for example, BAC. So here we are holding a long position, and after that, from this date, from beginning of April, from mid-March, we started taking short position, and we maintained the short position till end of May, or May 18th, and after that we closed our short positions again to the long position. So in this way, we can clearly understand in what direction we are according to this strategy. And yeah, there are many metrics here. You can look into it when you deploy these algorithms. See, for example, total profit made, and total profit made by all the trades, and total profit made by shorts and longs. As you can see, we got more profit from long side than the short side. So you can also see average trade net profit. That means per trade, what is the net profit and what is the net loss, etc., etc. And not only that, you can also see the transactions. So the time and exact time and quantity of entry. For example, on January 1st, 2020, January 14th, 2020 at 3:56 p.m. we have bought 277 size of Bank of America at $35.35. So this is the complete trade sheet. Yeah, and you can also refer to the code you have deployed. So this is how you can use the Blueshift platform to do in-depth analysis of your backtest. And let us go to our strategy again. So since we are happy with this, we can also deploy it in live. Now I'm going to show you how to deploy this in live. So you can just click on go live button. So it's going to take this algorithm live. So when I say live, there are two types of executions. Either you can go for paper trading, where it will just deploy it on live, but it will not use any capital. It will work on dummy capital, but it will give you returns. So it will give you all the results for the forward testing. Now we are done with the backward testing. Next step is to forward testing. So to see how exactly it is working in real-time scenario. And once you are happy with the forward testing results, you can release it in live with the real capital. So let me click on execute. So there are 5 small configuration steps you need to do before you take it to the live. So first one is to just give the drawdown limits, order limits, side limits. So drawdown limit means what is the maximum loss you can agree this algorithm to take. For example, it is 30. That means if an algorithm made 30% of the loss, you're going to stop this algorithm. So this is basically we are managing the risk parameters. So next one is order limit. So what is the maximum number of orders it can deploy in a day? So here it was 1000. So overall, if algorithm releases 1000 orders, so it's going to stop. And similarly, we have a size limit as well. So we gave a size limit of 10,000. So it cannot place more than 10,000 shares order. So let me save this and then click on continue. So the next step would be to select your broker. So to trade, you need to have an integration with your broker. For example, Blueshift has integration with these brokers. So if you want to release your algorithm in live with real money, you can either select Alpaca for US equities and all. For Forex, you can select FXCM. And if you are trading in Indian markets, you can select Master Trust. And for paper trading, you can take this algorithm for paper trading in Forex markets using FXCM broker, or you can also use Alpaca if you are doing it on US equities. I tested this on US equities, so I want to release it for paper trading on US equities. So I have selected Alpaca here. So you can just sign up to Alpaca for free and get your API key and connect to this. So after you select your broker, you're going to give a capital. So since this is paper trading, so let's give $1 million, and we also need to specify till what date you want this algorithm to run. So I just want this to run for a single day, so I'm just giving the end date as today. So next step would be to decide whether your algorithm to go ahead and take order without informing you, or do you want your algorithm to take confirmation from you to place an order. So if you click on auto execution, whenever the trading conditions are met, it's going to take buy or sell position. But if you click on one click option, it's going to give you a notification, and once you confirm, it's going to take the position. So let's go ahead for auto execution for just automation purpose. And next step is to read the terms and conditions and give your approval for that. So I'm clicking on I accept. And at the end, we are just going to review our algorithm's parameters. So if you want to recheck your strategy, you can just click on it and it will take you to your code, and you can just check all the parameters if you're happy with it or not, if there are any mistakes. If you're happy, you can just come out of it. And the broker we selected is Alpaca, and we are releasing it for live. And we have selected auto execution, and we started with a paper trading capital of 1 million with these risk metrics, with a drawdown limit of 30%, order limit of 1000, and size limit of 10,000. You can just click on confirm, and Blueshift will start connecting to the Alpaca paper trading platform. So as you can see, so this is a terminal. It is trying to connect with it's starting to make the connections with the Alpaca paper trading terminal. So it's going to take 20 to 30 seconds. So once the algo is initialized, performance and other details will be updated in the dashboard. So let's go through the options we have. So we have a dashboard where we can see how our trading capital is changing, and next we can go to trades button where it will list down all the trades that algorithm is taking, and this is the console. And if you want to recheck your code, you can click on the code and it will take you to the code. So again, you can recheck your code here if you want to change any parameters. Like for example, we have given many trading rules. So if you want to remove a trading rule, or if you want to change the logic for a trading rule, you can again go back and change it and deploy it. So let's go to the console and see. So yeah, our algorithm is live, and starting live with algo trend strategy.py. So it is going live with this strategy for Alpaca broker on paper trading, and currently it is using US Eastern time. So currently algorithm is live. Let's go to our dashboard. So this is our dashboard. So you can, once the algorithm start to trade positions, it will be updated every millisecond. And currently it is listening for new positions. So we just released our algorithm. It didn't take any position as of now, but once it start taking positions, you can see the positions here, and also you can see the trades in trades tab. So listening for new trades. So this is how you can use Blueshift Blueshift platform for your research and also to backtest your trading algorithms. Once you're happy, you can also release it for paper trading or live trading. So let's talk about QuantInsti's ecosystem and how you can use it as a beginning quantitative trader to learn the quantitative trading strategies and also backtest, deploy, and research. So these are the two products we widely use for our quantitative trading. The first one is Quantra. As I said, this is a portal where we have 40 plus self-paced interactive courses, and we also have Blueshift, which is a research and backtesting platform. So as discussed earlier, the first step of a quantitative trading system design is to get the data. So we have a free course in Quantra under the name Getting Market Data for Stocks, Crypto News and Fundamentals. So this is the free course. So you can access this course just by registering to it, and this course will explain you how to use price data APIs, means how to get price data of a cryptocurrency you like or a stock you like, etc. etc. And it will also teach you how to use fundamental data APIs if you want to access fundamental reports of a company. For example, if you want to know how much profit or how much revenue Apple had in the last quarter, you can use fundamental data APIs. So in this course, there are several APIs that were listed and also a live examples of practical implementation. And we have also explained how to get the economic data into your quantitative trading system using APIs. We have also given APIs for news and social media. So you can, using those APIs, you can extract social media tags and social media data into your trading system. You can also access the news headlines, and at the end, we also explain how to clean the data you got and how to visualize them for better understanding. So once you know how to get the data, next step is to design the strategies. So to design strategies, this is one of the widely used course. It's under the name Quantitative Trading Strategies and Models. So under this course, we have explained how to perform time series analysis to understand the price data or data you imported better. And next, we have also explained the econometric models that are used in this quantitative trading space, such as ARMA, ARIMA, etc. models. So using those models, you can create your quantitative trading strategy and deploy. And we have also explained how to convert your technical analysis knowledge into quantitative trading strategies. And we didn't just stick to stocks, we did also explain how to create quantitative strategies for options market as well. And let's say this is a starting step for you, so that this course will give you examples and code for all major types of trading strategies. But if you have a type of trading strategy in mind, you can also pick this. So we have a mean diversion trading strategies in Python, which explores all a major philosophy behind how to create a mean diversion trading system. And we have a course on momentum trading strategies as well, which explores major types of momentum trading strategies and the philosophy behind it. And we have a course on day trading strategies as well, which take you through the major day trading strategies and how to create the systems using Python and trade them in live or deploy them in live. And you can also explore statistical arbitrage trading strategy, which basically is a pair trading strategy, which is widely used by many of the funds. And so after this, to level up your quantitative trading journey, you can also explore ML part. So ML and AI is widely used in quantitative finance to create quantitative trading strategies. So we have a wide array of strategies. For example, you can start with introduction to machine learning for trading. So it's going to take you through the major elements of ML and types of strategies, such as supervised, unsupervised, and reinforcement learning strategies, and give you a brief of how these are being used in trading, and also explains you how to design a trading strategy using machine learning. And we also have a course on unsupervised learning in trading and deep reinforcement learning in trading, neural networks, and we have a course on portfolio management as well. So not just to create strategies, we can also use these quantitative methods to construct a portfolio and manage the portfolio. So one of the courses we have on it is portfolio management using machine learning, hierarchical risk parity, where we use machine learning methods to manage a portfolio and control the risk of the portfolio. So once you are ready with your strategies, as shown earlier, you can go to Blueshift platform. You can just give your code and backtest on the wide range of datasets we have. So we have datasets of US equities, cryptocurrencies, forex, and Indian equities as well. So, and we have probably data right from the beginning of the equity you selected. So you can just backtest them, and once you're happy with it, you can also deploy them on live, just like we have seen in demo. So we have two types of deployments. So you can either go for cloud-based deployment, where entire architecture is taken care of Blueshift and the broker. So you can either select FXCM, Alpaca, or Master Trust as of now. So in future, we're going to include other brokers as well. So with cloud-based execution, you need not install anything. You can just use our infra. You just need to open your Google tab, and then you can access all this infra. But if you want to use a desktop-based integration, you can install iBridge Pi, and you can connect to any of these brokers like Ameritrade, Interactive Brokers, or Robinhood, which are widely used in US markets. So you can install iBridge software and you can punch in your, like, you can just need to log into your broker account and it will connect you to the broker so that you can get the data, analyze them, and also place orders. So to know more about this desktop-based integration, you can enroll into our free course, which is automated trading using iBridge for interactive brokers. So here, we're going to explain how to fetch the data using iBridge API, and how to do order management, how to do portfolio management, and also how to implement your trading strategy. So for example's sake, here we took an example of interactive brokers, but with iBridge you can also place orders with Ameritrade, or you can also place orders for Robinhood. So yeah, so that's all for now. So we have a code for you, especially for the students that are attended to this session. So the code is YALE60, YALE60. So this code expires on 23rd February, which is like expires by Wednesday midnight according to Indian Standard Time. So by using this code, you can get 60% discount on all Quantra courses. Currently, we have 40+ courses that caters for beginners, intermediate, and advanced guys as well. So if you are a beginner, you can start with quantitative trading strategies or getting started with algorithmic trading, and slowly level up your quantitative knowledge. And if you're an advanced guy, or if you also have experience in trading, and if you want to explore a particular concept, we have a wide range of concepts like neural networks or NLP or mean reversion strategies, momentum strategies, or options, futures based strategies, etc. So you can pick the concept or pick the course which suits best to you, and you can start your learning journey. So you can use this code to get 60% discount in all the courses. So this is the website, quantra.quantinsti.com. So yeah, thank you. And now we can start our question and answer session.